We talked a little bit before the podcast that you didn't have the exact number of business owners that are going to retire over the next decade, but I think it's tens of thousands, and it's something equal to like a few $1 trillion. They're either going to be sold or they're just going to shut down because they're retiring, right? This is
Yes.
coming. It's a huge opportunity for people to acquire businesses right now. All right, y'all. Hey, welcome back for another awesome episode of The Necessary Entrepreneur. I'm pumped to have the conversation today. It's around businesses buying and selling and the experiences of that, and also from a person who's been an entrepreneur for going on a decade. So what we know is most founders assume a profitable business is automatically a valuable one. But when it comes time to sell, buyers are looking for something very different. So today's guest works with entrepreneurs to identify the operational issues, founder dependency, and structural gaps that can limit a company's value, and helps them build businesses that are actually transferable. So Muriel Touati, I came really close in the last name. We're going to go by Muriel after this, but just an awesome French name. But she's the founder and CEO of Exit 3D Studio, where she advises founder-led service businesses on increasing valuation and preparing for successful exits. So today we're going to talk about what buyers actually look for, why so many businesses struggle to sell, and how founders can create companies that operate beyond themselves. Muriel, welcome to The Necessary Entrepreneur.
Thank you, Mark.
Hopefully that intro gave a good representation of your business and what you're really focused on going into your fifth year of Exit 3D Studio.
Yes, absolutely. You described exactly what I'm doing and what we're going to talk about today. Yes.
So what brought you, let's start here in the beginning. What brought you from France 5 years ago? So what brought you, and then, because I think what that'll do is you were an entrepreneur in France. I think that'll lead into even more credibility and an idea on the uniqueness that you might bring to this environment in this space that you're in now too.
Yes, absolutely. It's very related, actually. So I moved to New York in 2021. I lived here in the past on different visa, but this time I have a green card, so that allowed me to stay longer. And because I just like the city, I still had friends. I decided to come to New York.
Mm.
Where are you located? I don't even know. Where are you located?
We're here in the Midwest. We're in Cincinnati. So
okay.
Yeah, so just a 2-hour flight from New York City. So when you came up, so green card means 10 years, right?
Yes, but it's constantly renewable.
So you're stuck with us for good now, huh?
Yes, looks like it.
So why, so you were already an entrepreneur in France?
Yes, I was, since 2017.
So why come to a new country? Because I think about if I went to, I'm just going to, we think about France and we think Paris, but there's Marseille, there's all these other cool cities that none of us talk about. But if I were to go to France or London or Madrid or Lisbon, I think it would be really hard for me to become an entrepreneur there for customers there. But you're making this seems to be this seamless transition. So can you take us through these first 5 years and why you're making it feel seamless and why it seems like it's comfortable to you?
Oh, thank you. I didn't know I was giving this perception, but so I already had my business in France online. It was, digital consulting, like LinkedIn consulting for clients, and as we were discussing earlier, like during the COVID period, I was creating an online course. So this was something I could transfer here. And all this time, even now, I still have my French client that I can coach on Zoom, like once a week, and they have access to my program. So this was, seamless, because I didn't have to change my offer. I didn't have to change my target audience. I just moved from France to New York and didn't change the business at all.
But you were going to buy a business though, right? Like that was the beginning.
Yes. So this is what I have been thinking about since last year. So in 2025, I realized that I didn't change anything from when I was in France. And I say, okay, so I'm missing all the good opportunity here. I'm meeting people and I cannot do anything. So first of all, I thought, oh, maybe it's going to be too hard to start a new business. So maybe I should buy one. I heard could be easier. I will be buying a cash flow. It will be easy. So I've been learning all about, business acquisition. I joined a program. I am part of a buying community, and it's been great. I've signed, I don't know, 100 NDA. I've submitted a lot of letter of intent. I even have an offer accepted, and I was like very close to buy a business until I realized that they were all having structural issues that was too risky for a buyer operator, I would say, like me. And as a matter of fact, like most buyers like me, sometimes they are employee even, and they want to buy a business to become an entrepreneur. We are all bumping into the same issues. So this is how I decided to create, pivot a bit my French business into Exit 3D Studio.
What, when you said an NDA, for all those people out here who haven't done it yet, what is an NDA?
It's a non-disclosure agreement. It's business broker. They make you sign that to ensure that you will not bypass them, that you will not go directly to the business owner because they want to get their commission. They also disclose different things that, for example, they are not checking everything about the business when they put it into the market. And this explains different things after, and why actually like 70 to 80% of business that go for sale actually never sell.
When
you see it right from the NDA, actually. Why?
Yeah, there you go. So an NDA, what it does is it's also showing you some things about the business that if they're going to open up a little bit of information about operationally revenue, if they're going to show you some of that, you're agreeing that you're not going to share that with anyone else.
Absolutely, yes.
And
yeah.
and if you do, there's penalties for that.
Yes, absolutely. Yes.
And then after that, you move through this process of an NDA. If you think you like the business and your initial high 10,000 feet evaluation of it, then you can go to an LOI, right? And then an LOI, go into details about what that is a little bit, because we're probably talking to some people here that they've been entrepreneurs in the past where they've built their businesses up. They haven't ever sold one, or they're also maybe like you were thinking about buying one. So you go from an NDA to then an LOI, which is?
Yes. So if you like the business, what they showed you, you analyze a bit the financial and you want to make an offer, you submit a letter of intent. So an LOI. Usually you send an email plus a letter to make your offer, explain roughly not roughly, it can be almost as long as a purchase agreement if you want to, where you put all your condition, the holdback, the earn-out, all the seller note. You can be as detailed as that. And actually, I think it's recommended because it's at least they like it, or they agree or they don't agree, and you don't waste weeks in due diligence. You know.
Because in LOIs, you're not bound. Either party isn't. It's just saying,
exactly.
This is a letter where I intend to submit an offer with these parameters. And if you're somewhat okay with them, then I'll move to submitting an offer and try to go to a binding contract, correct?
It is actually an offer. You're making an offer, but it's a non-binding contract. Though you will have some brokers, because that happened to me, that will be they will ask you to sign their own letter of intent, and it will be binding. So like always read those documents, because you can get into problems. You don't want to, until you do your due diligence, you should not be into a binding contract, because what if you find some problems and you decide you don't want to buy the business anymore? What if it has been not represented, correctly?
When you were going to acquire your business, at what stage did you decide to back out? So at what stage of the purchase process, and then why? What happened? What made you change your mind?
Yeah, so it was during the due diligence. I have been, running the financial, like an accountant, really into detail, looking the revenue by client. Actually, when you do a due diligence, you do like a financial due diligence, you do an operational due diligence, digital due diligence, all those sort of different due diligence. The one I was the most comfortable with was definitely the digital due diligence. This is what I've done first. I realized, first of all, okay, the business has no traffic, like 300 visits a month. So they don't really generate lead from that. I was reading also everything they provided in the data room to see, okay, how do they get their client? There was something also they were announcing, maybe how they have, like past August, they had about 35 clients. But we were in December, they still had 35 clients, but they said they are growing every month, getting new clients. So this was a problem and something I needed to resolve, because when you ask the broker, they still tell you that everything is perfect. But when you run the financial, you look at I had to ask for that. They didn't want to give it to me. The breakdown of revenue per client for the past year. And once I've been running that, I have been able to see that every 3 months, when the contract was ending, it was an initial 3 months contract, and then every auto renewal, and a monthly auto renewal, so cancel anytime. Actually, all clients working with them, most of them, they were leaving after 3 months. So they were able to get new clients every month, but they were leaving after 3 months. And just that realization made me step away. I said, okay, so this is it's not a recurring revenue, it's a rollover, sort of rollout. Sorry, my English. Type of revenue. And it can disappear at any time. Also, it was like a LinkedIn lead generation agency, and I was able to see also their practice. And I said, okay, this can break at any time. like I don't feel comfortable also taking this. They are pushing the machine a bit too hard. Plus, they were using the founder LinkedIn profile to generate leads, which was not an transferable asset, of course.
Yeah.
You know.
Did you find yourself, were you still interested in purchasing it at a lower valuation or not at all?
Well, I was not, but I explained everything. My offer was at 3.7 million. This is what they wanted. And when I ran all my analysis, I think the agency was worth only 600,000. But at this point, I say, yeah, no, I'm walking away.
Yeah. Yeah. What was their response to that? Did they even respond, or they just...
They did, but I sent an email like long like this with all the reason why, and even suggesting like you should be a bit more transparent, like with the buyers. I think they say, oh, it's so helpful, like helpful information, just 2 lines,
So
Plus, I
from that
never spoke with the owner either.
It was
Yeah.
all through the broker?
Yeah, all through the broker, yes.
Hmm. So from that experience, that caused you to start your business, correct?
Exactly. I understood since I was bumping into the same issues all the time and part of the community I am in, I can read all the struggle they have. I said, okay, this is making sense. And, this and with my previous experience in digital marketing, I say, you know what, I can help with customer concentration. I mean, this is what we do in digital marketing. We can help with that and the quality of the revenue, the growth, and the founder dependency as well. There's
Yeah.
different
Do you,
things we can be doing. Yeah.
do you find that is the founder dependency? It means the revenue of the business is dependent on the founder staying there, being there, maintaining those relationships.
Yes.
Do you find that the most significant problem or just one of the significant problems in achieving the valuation that sellers want? What's the most significant problem that you're seeing that you just can't get to the valuation that they feel the business is worth?
The so the first thing that I see, we see it on the SIM that we receive. Most of the time, I think it's the customer concentration that is the biggest issue, then the project-based work, and then instead of the recurring revenue, and then the founder dependence, the founder who has all the relationship with the customers, for example, no digital presence, like no sign of lead generation online. That means everything is referral, everything is passing by the founder. This is a red flag as well. And also just the founder who's managing everything, where there is no other decision maker in the business. This is also an issue.
Yeah. What do you like to see now evaluating businesses from the buyer side? So whether it's you doing acquisitions, whether it's helping people acquire, or if it's sellers, what do you like to see from a digital perspective, the digital presence of the business, the level that they're at? What are you looking for through the eyes of a buyer of these businesses? What level of digital engagement or digital operation? What are you looking for? It seems that in 2026 that it's not just AI driven, but you need to make sure that you have platforms dialed in from an efficiency standpoint, from an operations standpoint, so things can compound, so it can scale. What are you looking at digitally for a business?
Yes, so I think myself, as as an expert in digital marketing, I could acquire, like a business with a very like who doesn't have a good digital presence. It will be an upside for me because I will rebuild the website, I will create the social media presence, but also I will not buy the business at a high valuation. I will discount it automatically. But someone who comes from another sector, uh, and I think most buyer to pay a premium, they would expect traffic on the website. And this is easy to find, like when we do a digital due diligence, we just go on some tools and we see the traffic that they have. And if it's a branded traffic or if it's on real keywords. So we look at that, the traffic. I think the most important. Then when we look at the structure of the website, is there any sort of funnels uh, that could be working? Could they be generating leads from their website? Does it worth something? And then the social media presence also, because it's the perception, uh, the perception from potential customers.
Yeah.
Is it
So
outdated, inexistent? Yeah.
so we talked about funnels, and I think to break funnels down, really what it is, it's what's your digital approach to client and business acquisition, right? It's like, how are you taking those leads, put them in the top of the funnel and feeding down through your algorithm so that you can turn them into sales, buying, whatever your service or product is, right?
Yes.
So,
And
with the funnel perspective, what's your approach to building a funnel? You were in the digital space. You help service businesses. What have you seen that's happening with funnels? It seems like a lot of stuff's moving to a lot of automated things. It's easier to build these versus go and pay, very expensive experts. What have you seen happening with funnels over the past 6 to 12 to 18 months?
yeah, things have moved a lot into AI for sure. And there are different ways of building a funnel. You can have a funnel with ad, a funnel with a freebie. You can have a direct call funnel. There is more or less sophisticated funnel, but depending on what you are selling and if there is a team on the other side that can take calls or not. Yeah.
Yeah. If you were doing it all over again, if you were the Muriel who said, I think I'm going to buy a business, how would you do it now versus your approach back then? So you were evaluating the business, you signed NDAs, you went to an LOI, you're doing due diligence. Through reflection, which should lead to your experience to advise people and help them do this, what would you do differently now with the approach versus the Muriel of a year or two ago?
I will say it depends on the business. Like the business I'm building right now, Exit 3D Studio, the funnel is going to start with the book that I have been writing, and that will be out on Amazon end of July. So that will be my first, the beginning of my funnel. Then, you can go into my website, get the freebie, the scorecard, the call, etc., etc. But if it was, let's say, like a plumbing business, what I will be doing, I think I will be for sure using the Google My Business and making sure it is perfect. We have review from all clients. We have a solid website that is recommended locally, even on AI search. Maybe running some ads if needed. But I will try to move from the referral only. Referral is a bonus. It's nice to have, but if we only count on that, though I'm saying that, I'm pretty sure many plumbing business have already a lot of business, from referral, but just mentioning.
Yeah. I mean it's interesting. So tell us about your book. What obviously the title, but what's the title? What's the purpose? What's it going to do for us if it's the funnel to say, hey, Muriel wrote this book, we read it, it makes us want to work with her. Tell us the depth and what's happening in it and why you're writing it.
Yes, so it's called the Valuation Gap, what biases and seller miss. And in this book, I explain what I found and what needs to be corrected and why for higher valuation. I think it's valuable for business owners who are thinking about exiting their business at some point. But why not also potential buyers so they don't waste too much time on businesses that have this problem, or at least they know they should discount the value, the multiple.
Do you think that was it a good choice for you to work through a business broker, or do you think there was a different source that people should go through to go directly to a business owner? Is there a better way than just working through a business broker now to acquire and buy a
Yeah,
business?
I mean, most of the time, to find a business for sale, you're gonna go on different websites like Biz by Sell and others, and all businesses are advertised by business brokers. So those are partner for us. Like most of 90% of the time you will work with the business brokers, and that's okay. I mean, they facilitate, they have the financial ready, and while if you go directly with a potential seller, you might not get that. But sometimes you can get some really good deal. I'm thinking about one. So let me tell you, it didn't go through, unfortunately, but I was doing my off-market search, so to enter directly in contact with some business owner. At this time, I was looking for a marketing agency, and I ended up meeting with one uh, um, marketing agency in New York. We went for lunch. We had a good time, and he was telling me, like, oh, if you're interested, I have those other business. I ever give it to you for free. Oh, really? Like, I don't even have to get a loan or anything? And he was saying yes, but he had those conditions, like he would want to stay in. And then I start to dig. And also I said, but I would like to see the financial, at least show me the financial. I want to see if the business is profitable. And then I never got the financial. So this, you cannot even get a business for free if you don't get the financial. I mean, that's dangerous.
Yeah. So what's the benefit of buying a business versus starting it? Because you've looked at both. You've looked at buying and now you
It's
started
true.
yours.
Yeah, yeah. So the benefit of buying a business, if everything goes well, is you're buying a cash flow. So maybe you get a loan for like $1 million, but if every month you getting your 50,000 or 80,000 and the loan is, I don't know, I'm not making accurate calculation here, but like 30,000, you still get your 50. Okay. So you're buying that. This is what you're getting directly from day one. Um, while when you start your business, okay, you don't have a loan, you're debt free, but it can take more time to take off before you get to your 50,000 or 100K a month.
Yeah. And learn all the hard lessons of starting a business.
Yes. There
Why
is
are
a,
you so why are you so you're passionate. You're writing a book. You started a business. You almost bought a business. Where does your fire and your excitement and your energy for being an entrepreneur, where's that come from?
I think I like the freedom, like most of us, the freedom of being where we want to be, to take the decision we want to take, to not have to stay in a box, decide to do something and change it if we want. Uh, just creating a lot and especially when I've, for a long time I was doing everything myself. I think it was limiting me. Now I am more like outsourcing a lot of things that I'm doing so I can just have more project at the same time.
Are you outsourcing with virtual assistants? How are you doing that?
Sometime I did that with virtual assistant, but it didn't really work for me. I rather work with really highly specialist. Like if I want an automation, I don't want to teach the virtual assistant to do that automation. I prefer to hire a developer to do that directly. So I am working with specialists like this developer, graphic designer, um, all of it.
So how is you mentioned earlier with your engagement with AI? Can you talk about in your business and writing the book and helping people evaluate businesses? What's been your engagement with AI? At what level over the past 12 or 24 months?
Well, I've used it a lot for, you can create content with it. You can build AI agent to automate things. Like at the moment, for example, I am automating my blog because, you can be creating it with AI, but what if you have to only copy paste? That's not fun. Like might as well completely automate it. And so I am creating those different things, like anything that it's going to be repetitive online, I think it can be automated. And this is a great way to reduce founder dependency, by the way, and increase, the valuation of a business.
Hmm.
What do you think?
Yeah, I mean, I think that what all entrepreneurs are looking for. So let's say anyone that has anyone working for their company. Let's say it's not a company of one. The founder has scaled a little bit and they have employees. What we're all looking for is to find other humans to buy into this idea and this dream and this vision we have for our business. And what you'll find is that you need to have really good incentives. Incentives aren't just income and pay, but why would they want to come and do this with Muriel? Why would they want to come and do this with Mark? So an incentive is beyond just their compensation. But what we're finding is that that's becoming harder and harder and harder. And I can't tell you exactly why it is. Like, for example, I was on a construction job yesterday, and there was a crew of people building a wall and these stone walls. And I talked to the owner and I said, "Hey, I've noticed this guy over here. He's a really good worker. He stands out. He's completely different than everyone. You don't have to tell him what to do. He already senses what needs to happen. He's doing it before you ask him to. Before
Yeah.
you need things, he's already doing. So I'm going somewhere with this." And he said, in 30 years, he's the best employee that's ever worked for my business. And so here's what I know. Every business owner would like to have every employee or partner working at their firm and business be just like that guy. But it's tough to find these people. I can't tell you why. I don't know why. I don't know why every human doesn't have this. And so what I would say is all the founders and the entrepreneurs that I know really well that are highly successful, they will actually overpay for that type of employee. They will.
Yeah.
They
Yeah.
will. But they're so hard to find, we've had to look for other areas to bring efficiency and scalability inside our business. And unfortunately for humans on the other side that want to be employees, that don't want to be entrepreneurs, unfortunately for them, if they're not choosing to be like that great worker from yesterday inside your job, if you choose not to be that, AI is going to present new opportunities for founders and business owners and leaders. And so it's not going to eliminate, AI isn't eliminating the opportunity for humans to have jobs and careers. What it's going to do is it's going to eliminate the need for mediocrity from average performing employees and businesses. So that's what I'm seeing with AI with these agents. Us founders, leaders, business owners, we're going to use these systems so that we have someone that's acting like the employees that we wish we had.
Yeah, it's a nice way to say it. I think AI can replace some task that some employee will be doing. In some job, it's impossible, I think, that AI replace them.
Well, it's impossible if somebody's doing a quality job. That's my point, right?
Yeah.
If someone's doing a quality job, I don't want to replace that.
I'm sure that that person already is, using some sort of AI to be even better. And I think anyone can use it now just to get better at what they do. But in some, I don't know, like I was taking the plumbing business example. I don't think a plumber, maybe there will be some AI enablement, but when they go and they repair, it's still a human doing it. And so what you're saying is very relevant, like the one who's going to do the good job or who's not going to fix the bathroom, like failing at it every time. Like you see the difference. Yeah.
That's it. And I think even what can happen is a plumber who isn't the entrepreneur or the business owner, if they're a plumber, they actually can use AI to become more efficient. We used to type things into Google. Well, AI is just a more efficient response and engagement system is what it is. If we're right, there's many things above and beyond that, but for an employee, it's a system that allows them to do their tasks in a more efficient manner and at a higher quality because it can reinforce, are you doing this right? Are you not doing it right? Can you look for different ways that this has been done recently? Can you go into, hey, it could be Claude or Chat GPT, whatever the name of your AI is. You could say, hey, can you look at the total landscape of plumbing businesses in Milwaukee, Wisconsin? And can you go through the testimonials that customers are giving at a high rating on Google and tell me what they appreciated about the experience? It's questions like that. What did they
Yeah.
most appreciate about their plumber? And it could give you insight on what customers are really appreciating. Right? It might not just be about fixing the leak. It might be about how you engage with them when you arrive to their home. It might be if you run into a problem that's going to cost more, it could give you some soft skills on how to engage with the customer. So, all those things, that's what AI is going to allow us to do more on the average level. There's a lot more higher level stuff. So, I think for somebody evaluating businesses, it could help you evaluate the business where you might not need attorneys on the front end. You might not need accountants on the front end. AI can do some deep forensic things if you give it the information.
Yeah, as well. Absolutely. I am thinking to create some sort of calculator, from when I do my business valuation diagnostic, just to help and show. Um, yeah, as long as you give them what you want exactly. If you don't know what you want to build or how you want them to take into account, you will get maybe not like a weak result. But if you know what you're talking about, you will get, you can. For sure, when I was doing I was trying to buy businesses, I was giving a lot of information. It was helping me a lot, without disclosing, the name of the company or anything. It was helping me a lot.
Yeah. What so I know that there's small business administration loans out here. A lot of people utilize those to acquire businesses. And you have more expertise in this area than I do, but I believe they'll fund up to probably $5 million, somewhere in this range.
They do, yeah.
So speak to this process a little bit more. If someone's never owned a business, what's that process like to go try to get an SBA loan? Like, where do they go? What's the experience look like?
Okay, I think the first step is to go to a SBA lender, so a bank that will do SBA loan, just to get SBA approved. Both business owners can do it and buyers. That means that the lender is going to ask for various information and give you a bit like your lending capacity, and just give you a letter that say, okay, you're SBA approved. You can show that to sellers so they know you can get a loan. This is the very first step. And then once you find a business, you have offer accepted, you will go back to your bank, say that they're going to ask for the financials and a lot of information. They're going to ask you for a lot of information and start their process. And this is taking time. They might renegotiate already a few things. Say, whoa, your offer was too high. Like this, we're not gonna finance this. It will be less. Maybe you need to ask for a bigger seller note. And so this is the process.
Hmm. What who's your ideal customer or client? So you're building your business, you're writing your book. Who are you really trying to attract? Who are you trying to work with?
Yes. So founder-led service business owners that do between 500K and $10 million in revenue. And I'm happy you mentioned the SBA because buyers like me and many of us, we will use a SBA loan. And usually this business doing between 500K and $10 million in revenue, they are financed, by SBA loan. Let's say that private equity, investors, they are less interested in those businesses. Though if they have a super high, like a $1 million cash flow, they might come into competition with you. That happened to me as well. When a business is really good, they're on it as well.
So 500,000 to 10 million. what's the multiple? Is the multiple based upon, a lot of people hear this word, this term, the acronym EBITDA. They don't know what it is, but it's pretty much the profit before you pay taxes, right? Is that a
Yes,
good way to say it?
It's a earning before interest,
Interest, taxes,
tax, depreciation,
depreciation.
and
Yeah.
amortization.
Yeah.
So all
But
of that. And this is the right number we're looking at, the EBITDA.
yeah. It's pretty much like, hey, how much are you going to make on the business? Like, that's just what we're getting down to. Right. And so a lot of commercial real estate, I'm involved in a lot of real estate. Those are sold on what are called cap rates. It's just an X as well. A cap rate is cash on cash business. This will be a 7 cap rate. That means that if you buy it for cash, you can get a 7% return on your business every year. If it's an 8X, 8 cap, 8X. So you're selling businesses probably for 3 to 6 times that EBITDA or somewhere around it. If it's 1 or 2, boy, that's a business that it's like, wow, you might not have any good customer base. You might not have good consistent revenue. But if you take, let's just say, a $5 million sales business, what's a good EBITDA on that? Just in general, across, I know it's different with different segments, but what's good? $1 million, 750.
It depends what they sell for sure. It's really hard to answer that questions because, if they have a lot of inventory and everything they resell, they have to, they have a lot of spending to get the $5 million in revenue. They could have just 500K in EBITDA.
Yeah.
Like it depends. While a service business with very lean in operation, don't have much, you know, spending to
Not a lot of
deliver the
overhead.
service. Yeah, a lot of overhead. Maybe they are making 2 millions in EBITDA. I don't know.
Is a big problem that you find in these businesses that the owners a lot of times will run a lot of their expenses through the business, therefore it takes away from the EBITDA. That's a big problem, isn't it? On being able to value
Well,
the business.
yeah, but so this is why there's a lot of debate here, because there are a lot of things they are not supposed to do, but at the moment where they want to sell the business, they disclose everything. How they did the trip with the family, I don't know, $10,000 back. It will be an add back. You need to accept it so they get, more money when they sell. All the restaurant, everything. They disclose it all, how it was personal. Even the family, let's say they have a son, a wife, a father working in a business. Oh, they're not working there. I just give them a salary. It's just money they're getting. So this is so bad for, tax purpose. They're not supposed to do that. But when they sell, they disclose it all.
Yeah. It's kind of funny, isn't it? It's
It
like,
is. It's hilarious, actually. Yes.
Yes. What are you, as you build your business and you're going to write the book, what are your own goals for your business? What's your approach to setting goals, to projections, is it a 3 to 5 year time frame? Is it just the next 12 months? Is it more a passion project? What's your approach to seeing what the legs and what the wheels on your business are going to do going forward?
I'm creating my own sort of P&L with putting all my numbers, like the revenue coming in, what I'm spending on what, and with a bit like my objective. Like I imagine I put on the P&L how much I'm supposed to bring in, so I can do this investment. So this is how I approach it. And for now, I just created it for 2026. But I mean, it's just something I can replicate for other years. I haven't done it and I did that only, I'm going to tell you, I did it because the lender, they ask you to do that. They ask you to do a simulation for 3 years. I say, it's very interesting. I'm going to do it for my own business, even if I don't get a loan.
Do you think you'll acquire or buy any more businesses? Do you think you will, or will you just advise, consult, do strategy?
I am still interested. I'm still interested to buy a business, but most probably I think off market. I think the business I have built helped me to find also off market deal. Like just today, I spoke with a business owner. He was telling me, we want to prepare. I was thinking about it. And the call that I had with him was not even to discuss that. It was more a one-on-one networking sort of exchange. But they think about it, like many of it.
We talked a little bit before the podcast that you didn't have the exact number of business owners that are going to retire over the next decade. But I think it's tens of thousands, and it's something equal to like a few $1 trillion. They're either going to be sold or they're just going to shut down because they're retiring, right? This is coming. It's a huge opportunity for people to acquire businesses right now.
Yes, because it is the period for a few more years where all the baby boomers are retiring. And a lot of them were business owners. So I've heard this in some media talking about the biggest transfer in the history. And it's either you get a piece of it or it just disappear. And I must say, I just now when I see some business that are closed, I'm wondering, I don't know, was it a business that failed or was it a business they didn't think they should sell, like we don't know.
Yeah. Yeah. So maybe that's a part of your passion project, right? To help all those people, not just to help buyers acquire, but help those people sell their businesses. Help them.
Yeah, exactly. I want to help the business owner sell their business at a higher valuation because as a buyer, since we're using loan, to be buying a business, we don't mind paying more for a good business. What we don't want is to buy a business that disappear the moment the founder leave. So it's a win-win situation, helping the business owner rebuild a bit the business in a way that is less risky for the buyers. So I could benefit from it. You could. Anybody interested in buying businesses could benefit from it.
Yeah. So when's this book come out? Do we know yet?
Yes, July 27th.
July 27th. We'll make sure that we come back to this episode then as well on the 27th. Do you find it, maybe to wrap up with a final question here, do you find in talking to owners of businesses that it's very emotional?
Yes, can be for some. It depends. Honestly, it depends. I've noticed in younger entrepreneur, they are more like serial entrepreneur. I don't think they have much emotion. They are here for the thrill. I don't know, the sensation that they give them to build the business, exit, and they do that. And maybe the baby boomer who has been running the business for 40 years. Yeah, it's probably very emotional. And they want to make sure, I mean, it depends again. Some would like to just get the money and leave. Because I have been signing some LOI for, like business like that. They just wanted to retire in Florida and just leave and almost no transition. So you have business owners like that, but you have some, and I think most of them really care about the, the brand they have built, the legacy, keeping their employee, making sure things continue for the clients that they have the employee, the process, everything. They want everything to continue just like when they were there.
Yeah. Makes a lot of sense. So what do you want everyone to know that listens to this? Do you want them to go buy the book? Do you want them to come to your website? Do you want them to come talk to you about selling their business? What does Muriel want to happen from this episode today?
Okay. You could, for example, go to my book page and download the first chapter of my book. It's on exit3dstudio.com/d-valuation-gap, and you can get the first chapter. Also have exit readiness scorecard to also calculate and see where you stand on the.
Read the first chapter, which you'll
Yes.
go into Muriel's funnel, which will then be a link to buy my book when it comes out, which then will be a link to put your business in if you want to sell. It seems like you're taking a very smart approach to the business. I hope that the people that you help is 10 or 20 or 30x even the significant profit and money that Muriel's going to make. And you have a
They will make more money than me for sure. That's
well, there's
for sure.
the sale.
Yes.
There's the sales, Muriel. It comes out. Well, I'm excited to have you on this side of what they call the pond, right? I'm glad to have you on this side of the Atlantic with us for 5 years. And so give us in the parting here, if we go to France,
Yes.
give us a little tidbit, give us Muriel's best advice for anybody. And if you give us the right advice, they might come back to you and sell their business with you, Muriel. Well, give us the best advice if we're going to France.
Well, first of all, I am from Nice, and I think it is the nicest region in France. So French Riviera, I think, is more fun than just Paris. So if you plan a trip to Paris, come visit also the French Riviera. Our culture is really blended with like Italian culture. It's the only place in France that is like that. It's just beautiful. If you go I will say between June and September is the best moment. Although we have nice weather all year long. We have good food, good wine, good weather. You can go skiing also. It's not just the beach. A lot of hikes. Yes.
So sell your business with Muriel, buy her book so that you can afford to go on your dream vacation and go to the French Riviera.
Take it on your vacation. You can take the book on the vacation.
There you go. It's that time of the year. We're coming to this June moment. Well, thank you for the time and sharing with the Exit 3D Studio and what you're doing and the book coming out. So go to your website. We'll put all the tags up. Read the first chapter and then start engaging with everything that Muriel's doing. So I appreciate the time you've given us today.
But thank you, Mark. I appreciate to have had this opportunity to talk with you today. It was fun.
100%. Yes. Thank you very much.